if Bitcoin is going to revisit its lows, it's not going to, in my opinion, have to do with a new fraud, a new this or new that. Even with Binance, the markets has kind of digested the chance that what the SEC has claimed is true. But the bigger question is, if you look at what's going on with the stock market and just the relentless upside action we've been seeing in certain stocks, let's say we do all of a sudden get a corrective move in stocks of 10, 20, 30%. How does that then affect Bitcoin and the crypto markets if you see a run for safety? Because I don't think at this point yet we have Bitcoin is certainly not a safe haven yet. All right. We saw a little bit glimpse of that during the banking crisis earlier this year, but it's really still been trading as a risk asset. And to me, that's where I personally don't think so. Because again, if there's one thing, the COVID tank, and again, that was a black swan event. It caught everyone off guard. But one of the things that I remember vividly from that period, as well as past really panicky sell periods, is that even gold sells off for short amounts of time. And so I think people have to realize that even if you get to be that panicked market, that everything is going to dump. It's people just freak out and they just dump all asset prices, even if it's something like gold, which is a safe haven, at least in the short run. So that kind of opens the door for maybe a buying opportunity if that happens, even if a spot ETF has been approved at that point. And let's not forget that the top on the last cycle was exactly when the futures ETF got approved. So here we see that certainly it wasn't like all of a sudden that was the new bull market. That was actually the top of the bull market when that happened. And I think one of the things, I mean, so there's some things that I'm seeing in these charts. And so this is the 10-year yield chart. And what we had was a wedge pattern that was a bullish wedge pattern. We broke out yesterday with that solid economic news that we got, the GDP revision to 2%. And then today we had the slightly better than expected PCE number, which kind of brought back in from this next resistance level, which is what to be expected, right? We broke out of the first one, but the second one hasn't been tested yet. It has to pull back. But this is the key, is that are we going to see a bigger breakout on yields if this channel, see this beautiful, this is actually a bull channel. In fact, it's very, very similar to what we've seen on gold play out over the last 4 years or so, the same pattern formation. And if this starts to break above this line, you at least are headed back to 410 and then maybe the highs of 436 on the 10-year. And the question is, the higher rates go, what do risk assets do? That's the question I have. And I think also what's concerning to me is the divergences that we're starting to see. So if you look historically at the 2-year versus the stock market, or the 10-year versus, there's a very clear kind of coordination between what goes on there as well as the markets. And we've seen a divergence over the last, so long, let's say the last 6 months, in the market with these signals. So something weird is going on here, something that is unsustainable if you look historically at the markets and at these other signals. By the way, another signal that I pointed out recently was M2 money supply. So M2 follows like every up and down in M2. Well, there's actually honestly been no downs until recently in M2, but you can see the vertical nature of M2 as it climbs. In fact, let me see if I can bring this up here so we can all kind of take a look. But as M2 climbs, the market has always climbed. And let me go to the S&P 500. And then let's bring up the M2 money supply.
Yep.
So what we can see here is if we go, and I can zoom, and I want to zoom out for everyone to see this, is that if you coordinate this with COVID, there's COVID and there's your money supply increase. And then look at the run as money supply goes up. Then look as money supply flattens and starts to decline. We have this. The problem is that this action here is down money supply while we have been rallying. And that, again, is problematic. That tells me there's something brewing here in the markets. And it may not play out for the next 6 months. We don't know. But at some point, there has to be a revision back in the markets or in money supply to some central point.